When we first looked at Capital Safety, we believed we'd identified one of the market-leading businesses in the space with an incredibly strong brand name built on a very strong foundation in the US marketplace. So we had a business that we felt would continue to grow very strongly because we were confident in the end markets and the specific safety driver. We had one of the market-leading businesses with one of the strongest brand names in the space, an incredibly strong history, track record, tradition coming from the US footprint, which brought with it all sorts of know-how, R&D, product development. That meant it was a very proactive research and development driven business. We made the initial investment in the middle of 2007. We got to a successful exit at the end of 2011 with a sale to KKR. And on making that sale, we crystallized a 2.7 times cash-on-cash multiple, and from an R perspective, a 3.6 times multiple and an IRR of 93%. On taking over the business, there was misalignment, stroke confusion between the business, the board, and the R shareholder.
What I was asked to do was to get back to double-digit growth. That was really the assignment.
On bringing on Anders, we could then discuss with him what else needed to be done around the senior management team and structurally around the rest of the organisation to drive through some of these initiatives that we had identified as being important for bringing the business forward.
I took away the micromanagement structure which was put in place by my predecessor, especially in the US, and unleashed the power in that organisation. And I changed the entire management team in Europe, from sales managers to technical managers to the general manager to the marketing director. We took them all out, replaced them with an American out of Asia. We identified some product gaps, especially in training and in systems and engineering. And then we made, how should I say, we made bolt-on acquisitions to fulfill these gaps.
We could then focus in on some of the specific areas where we believe we could generate value. Rolling out a more aggressive product development pipeline to reinvigorate the business, to geographically speaking focus on those areas of the marketplace where we could get a much faster growth rate, and that meant expanding the business not only in terms of new areas but also into the areas of Latin America, for example, but also into Far East Asia.
You had a power in the American-Canadian organization which were depressed. So by unleashing that power and then at the same time then capture the growth which actually came in oil and gas market, to continue to take that market share by being very aggressive, especially in R&D, saying 30% of all products should be renewed within 3 years. By having that, then you are really capturing the market.
Anders, as a CEO, is a very dynamic individual and is very strong at delivering the right vision for the business, and importantly also carrying the workforce and the company with them along that journey and vision.
You have transparency, you have alignment, you have trust, and then you have discipline. If these four are really aligned, then PE is the best ever form to be the owner of the company. What I mean with that, as an example, is saying for Capital Safety, it was a very, very limited board. It was three executives and it was two ARL members, and we worked like a team.
With the setup we had over the last 2 years, we were all aligned, and once we'd set people off in the right direction, they could then go off and implement. And where we needed to provide some additional follow-on advice and support, then because of the dialogue we had with the business at that time, that was something they readily requested, and we could deliver quickly.
From cradle to grave, it is a project. You are bought, you have 3 to 5 years before the exit, and then you can't be cat and dog. You have to have that alignment, and if that alignment works, then you create value for the shareholders.
We managed to exit the business from an R perspective with a 3.6 times cash-on-cash multiple, an IRR of 93%, and for the fund as a whole, the multiple was 2.7 times with an IRR of 26%. Over the last 2 to 2.5 years, we've taken a business that was underperforming, used the active ownership model that we have rolled out across the rest of the portfolio, and delivered an excellent result for the LPs and the investors in the 2005 fund.